the way I treat Bitcoin is it is an asset that I buy, and I'm going to give it to my grandkids. So the reason why that's really important is that's not a new phenomenon with just Bitcoin. If you think of, let's take the country of India. In their culture, gold is passed down from generation to generation to generation. It could be jewelry or kind of the family gold, right? If you think in the United States, land a lot of times is passed down from generation to generation to generation. And the ability to pass these assets on from generation to generation really drives quite a bit of wealth, right? Whether it's real estate, land, gold, or any other asset. Bitcoin has a lot of the same properties of these assets. So if you think about land, it's a finite asset. They're not making more of it. Same thing with Bitcoin, right? It's a finite asset. There's only 21 million that will ever be available. If you think of gold, it has sound money principles. It's outside of the system and no one can devalue it. Same thing with Bitcoin.
American entrepreneur and investor Anthony Pompliano just dropped a bombshell about Bitcoin that will absolutely shatter your understanding of wealth. Forget everything you've been told about gold and land being the ultimate ways to pass down wealth through generations. Bitcoin is the game changer you never saw coming, and if you're not paying attention, you're already falling behind. For centuries, families have handed down gold and land as safe investments, symbols of wealth and prosperity. But guess what? Those old-school assets are dying. Gold can be manipulated, land is tied to location and politics, and both are limited in ways that Bitcoin is not. Bitcoin? It's pure digital gold. There are only 21 million Bitcoins in existence, no more, no less. As demand skyrockets, its value will explode. Unlike gold or land, Bitcoin can't be inflated or devalued by governments. It's completely independent, completely secure, and completely built for the future. This is the truth they don't want you to know. Bitcoin is the future of wealth transfer. It's the new gold, the new land, and the ultimate asset to pass down to future generations. If you're still clinging to the old ways of wealth, you're already behind. Bitcoin is coming for everything you thought was secure, and it's about to change your entire mindset on wealth, forever. Watch clips from the interview for further insights into Anthony Pompliano's conversation with Tom Bilyeu. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
But a great way to ensure that you're able to invest is to actually take out of your paycheck your investment money first and then spend what is left over. So that's kind of the first thing is you got to get money to be able to invest. Then what do you do with that investment money? And really, I think for the average person, what you want to be able to do is you want a dollar cost average. Every time you get a paycheck, you want to take some portion of it. You want to put it into the S&P 500, NASDAQ, and then I like Bitcoin as well. And the reason why those three assets is because they likely have very long-term resilience. They have a return profile that is pretty good. And also, they're very simple to understand. You kind of know what you're buying. I think where people tend to get in trouble is if you are an amateur, but you are trying to make professional moves. And so I say, just like the person who goes and plays pickup basketball on the Saturday wouldn't try to go play in the NBA, I don't think that the person who says, hey, I'm going to spend 30 minutes a month on the investing world should try to go and pick individual stocks or use leverage or short things or anything like that. And so understand kind of what your knowledge set is, understand what your kind of competitive advantage would be. And for the average person, it's actually discipline. Just simply continue to dollar cost average into very simple kind of plan, and then let time and the market do its thing. If you take the US economy in general, it has gone through a shift over the last 50 years or so. It used to be that the US economy was dominated by industrial businesses, manufacturing businesses. You know, you can think of these companies as businesses that created physical things for the physical world. And so whether it was car manufacturers or construction or, home builders, et cetera. But we've transitioned very much to a world where now you have what is considered these kind of capital light businesses. They're pretty much software oriented. They're able to create a product. They don't need a manufacturing facility. They don't need nearly as many employees per revenue as they used to need. And those businesses are really capturing a ton of the revenue. And so a very simple example would be, look at the media industry. It used to be all about newspapers and magazines. You had to make that stuff and you had to get that logistically out to people, and you paid, subscribers and all this stuff. Now you can simply just use the internet and you can create it. You don't need that plant to print the newspaper or print the magazine. You don't need the logistics. You simply are able to just put it out there in software. And so naturally, as that transition has occurred, the businesses that are better, right? They're more capital efficient. They're able to drive more revenue per employee or more profit per employee. They continue to grow while the businesses that are left in the traditional economy have more of a headwind. And so that shift from industrial manufacturing, kind of physical world businesses to these kind of software-oriented businesses really is the story of the last 50 years. And you can see that in the concentration you're talking about, right? The top 7 companies in kind of the S&P 500, the Magnificent Seven, they're all software-based businesses that really are pretty special and by a number of different measurements, but also look at the richest people in the world, right? Really, other than Bernard Arnault, who sells kind of a luxury physical item, everyone else is based in the technology world. And so that shift, I think, is really driving changes in our everyday lives. And so naturally, that shift in our everyday lives is showing up in investment returns. And you're seeing those tech stocks are doing much, much better than maybe the rest of the S&P 500. And so that, I think, is going to be the story for the next 10 or 15 years, is a continuation of this software story. Mark Andreessen famously wrote this piece about a decade ago or so, and he said, software is eating the world. And we now are seeing very real examples of this, right? Obviously, Amazon used software to eat the bookstores. You can see Facebook was able to use software to eat into the yellow pages. And you kind of go through all these examples. But software is also eating gold with Bitcoin. The kind of this software-based money is really kind of much better and more popular right now than gold. You can also then take that even a step further, obviously, with the media companies. But I think AI is really interesting. Like AI is starting to actually eat into the number of employees a company actually hires or employs. And so software is coming for all of these different use cases, and it's going to make the world more efficient. It's going to empower some really exciting, cool things around robotics and self-driving cars and AI agents and kind of, the quote unquote, the future. But also as investors, you have to understand, am I betting on things that I hope don't change? That would kind of be more of like a Warren Buffett style of investing. Or am I actually betting on things that I hope do change? And that would be more kind of a venture capitalist or tech stock investor. Once you understand who you are and what you're trying to do, then that really allows you to figure out where you're going to go put the money. If you think about Bitcoin, right, the way I treat Bitcoin is it is an asset that I buy, and I'm going to give it to my grandkids. So the reason why that's really important is that's not a new phenomenon with just Bitcoin. If you think of, let's take the country of India. In their culture, gold is passed down from generation to generation to generation. It could be jewelry or kind of the family gold, right? If you think in the United States, land a lot of times is passed down from generation to generation to generation. And the ability to pass these assets on from generation to generation really drives quite a bit of wealth, right? Whether it's real estate, land, gold, or any other asset. Bitcoin has a lot of the same properties of these assets. So if you think about land, it's a finite asset. They're not making more of it. Same thing with Bitcoin, right? It's a finite asset. There's only 21 million that will ever be available. If you think of gold, it has sound money principles. It's outside of the system and no one can devalue it. Same thing with Bitcoin, right? It's outside of the system and no one can devalue it. And so I like to think of there's a very small amount of assets that you can buy today, you can hold your entire life, you can pass it on to your kids or grandkids, and that is going to set up your family and kind of those that come after you to be in a really good position. So that's Bitcoin for me. It stores economic value really well over a long period of time. So I want to make sure I have that for some portion of my portfolio. When it comes to technology, I am not like a Warren Buffett. I don't want to try to bet on the world not changing. That's not how my mind thinks. It's not what I'm intellectually stimulated by. I am much more interested in how things are going to change and where that change is going to occur and who is driving that change.
Anthony Pompliano urges individuals to prioritize investing by saving aside a portion of their income, withdrawing investment funds first, and then spending the remainder. He advises a dollar-cost averaging method, with investments in diversified portfolios such as NASDAQ and Bitcoin, both of which have long-term stability and a good return profile. Anthony Pompliano observes that the U.S. economy is shifting away from industrial production and towards software-oriented enterprises, which is fueling innovation and disruption. He sees Bitcoin as a unique potential to store economic value in the long run. Understanding one's goals, risk tolerance, and strategy is important for managing market difficulty. Anthony Pompliano points out the value of discipline and consistency in investing. Let's go back to the interview and watch more clips to gain insights from Anthony Pompliano.
Do you see something else when you look at the just unbelievable success of MicroStrategies?
If you put yourself in Michael Saylor's seat, why does he buy Bitcoin to begin with, right? Do I think that there's an element of, hey, if I buy Bitcoin, then the Bitcoiners will notice me and they'll start to buy my stock? definitely. But I think probably the bigger story was I'm sitting on $500 million of cash. And if I keep holding this cash and it's being devalued, since 2020, the US dollar's lost more than 25% of its purchasing power. That would be very detrimental to somebody who's sitting on $500 million of cash. And so I need to convert it to something else, whether that's real estate, land, gold, Bitcoin, whatever. And so I think that was kind of a huge piece of this is, hey, I'm now convicted that inflation is going to be a problem. The currency is losing value. I need to convert it to something else. He buys Bitcoin. And I think that it's kind of this thing where, you ever like go to the pool, you're like, I wonder if it's cold or not. So you dip your toe in. Oh, it's not that bad. Then you put your ankle in, right? Then you put your knee, and then eventually you go all the way in the water. That's kind of what happened here, right? As he like dipped his toe in, he bought, $400 million or so of Bitcoin. He waited. He's like, well, that worked. Let me buy some more. And then eventually he was just like, I'm jumping in the deep end. I don't need to check the water. I'm buying as much Bitcoin as I can. And so naturally, as you go through that progression, it definitely begins to attract people who are much more speculating on the stock. And really the genius of his strategy is he's not just attracting speculators from kind of the equity market, he's also attracting speculators from the debt market as well. And the debt market is massive in the United States. And so he's giving the ability for people who have a mandate to buy bonds, say, hey, come and buy these convertible bonds at MicroStrategy. I'm going to give you underlying exposure to Bitcoin. So now he just unlocked a whole new pool of capital that wants exposure to Bitcoin. And so that has played out very well for them. And you see all these copycats around the world that are all kind of popping up saying, hey, that works so well. Maybe I'll do the same thing. How do I start to raise capital and go and do it? But maybe the bigger story here to me is in the public markets, companies previously had two levers they could pull to improve their business. They could drive more revenue. So there's a revenue lever. And then they could also cut expenses. So they could pull the expense lever. MicroStrategy kind of opened people's eyes to know there's a third lever, which is your balance sheet. So you have revenue, you have expenses, but what he's doing is he's buying Bitcoin. And by putting things on your balance sheet that go up in value, that is a third lever you can pull. And real estate investors kind of sort of knew this before, right? Because they would have their ability to borrow against their balance sheet and things like that. But this is a whole new way of thinking about it. And so I am predicting that there are going to be a ton of public companies that are going to say, wait a second, we don't pull the revenue or the expense lever. We pull that third lever, the balance sheet lever. And some people are going to do it with Bitcoin. We already see companies like Soul Strategies, which I'm involved with in Canada. They're doing it with Solana. But there's going to be companies that do it with all kinds of assets. They're going to say, look, let's put this on the balance sheet and let's wait for some capital appreciation to happen. And let's continue to play this game where we can now pull the lever of the balance sheet. In that world, the ability to evaluate companies, the ability to be a capital allocator is going to be really, really important. And so I always say that, to be successful in the world going forward, you need to be able to operate companies, you need to be able to allocate capital, and then you need to be able to create content. If you can do those three things, you're kind of a triple threat. I think a good kind of framework for people to think about is if you want to drive a financial return, you have to take risk. Right. And a, kind of old adage in the financial world is the risk you take is the return that you make. So whatever risk you're taking, if you take a small risk, you can only expect a small profit. If you take a huge risk, then you can expect a potentially huge profit, right? But the risk and the return is very much married together. And so obviously the best investors in the world are looking for, how do I take almost no risk and make a massive return? It's just that doesn't exist very often, right? So usually it is small risk, small risk, small return, big risk, big return. And what I think Michael Saylor figured out is this Bitcoin thing is highly volatile, 80, 90, 100 vol asset. And it goes up and down, up and down, up and down. But over a long run, it goes up. And so if I put this highly volatile thing into the public market, there's a ton of people who are going to have an opinion, to your point. And some of them are going to think that it's going to go up a lot, and some of them are think it's going to go down a lot. And they're going to bet in either direction. But again, it goes back to people who are investing in that asset. They are betting, knowing they're taking a big risk, and so they're expecting a big return. And that's what they've gotten. If you have bet and said that MicroStrategy was going to go short, for the most part, you've lost money. And you probably lost money big because it has gone the exact opposite way. But if you've bet on MicroStrategy and it's gone up a lot, you've probably made a lot of money. And so when I think about that type of company is you can expect it to have the same volatility as the underlying asset. There have been times where MicroStrategy has gone up, hundreds of percent. There's been times where it's been cut in half and lost 50% of its value. But it goes back to that idea of what is your time frame, right? There was this great study done, I think by Fidelity, where they looked at all of the best performing accounts and they tried to find commonality between them. And so what do the best people from a return perspective do? And two of the insights they got were the best performing accounts were from people who lost their passwords or people who had died, because people just didn't look at the account for 5, 10, 15, 20 years. And so naturally the same thing here is if you buy some of these stocks, whether it's an index or the individual stocks, and they're good companies and you don't look day to day, you just come back in 2 years, it's probably going to be doing better than it was when you bought it. But the problem that people have is if there's a daily ticker price, it went up today, went down today, went up today, went down today, their entire mood is affected.
Anthony Pompliano attributes MicroStrategy's success to Michael Saylor's strategic choice to convert the company's cash reserves into Bitcoin, minimizing the effects of inflation and currency devaluation. Saylor first spent $400 million in Bitcoin before progressively increasing his stake as the approach proved successful. According to Pompliano, MicroStrategy's approach has attracted speculators, resulting in a new pool of capital-seeking exposure to Bitcoin. Anthony Pompliano believes Saylor's plan was motivated not only by a desire to attract Bitcoin enthusiasts, but also by a belief that inflation would be a problem and that the currency's value was declining. By investing in Bitcoin, Saylor was able to turn MicroStrategy's cash reserves into a more valued asset. This decision was most likely motivated by the fact that the US dollar has lost almost 25% of its purchasing power since 2020. The success of MicroStrategy's method has drawn copycats, with businesses all over the world attempting to imitate the technique. Pompliano predicts that more publicly traded corporations will use their balance sheets to invest in assets such as Bitcoin, real estate, and other appreciating assets. Pompliano emphasizes the importance of understanding the risk-reward relationship, pointing out that investors must take reasonable risks to obtain big profits. He warns against making emotional decisions, instead recommending investors keep a long-term view and avoid being persuaded by short-term market volatility. According to Pompliano, investors must be competent to run businesses, distribute resources, and produce content to succeed. He emphasizes the value of emotional discipline, stating that investors must be able to remain cool in the face of market turbulence. Anthony Pompliano further adds that Bitcoin's strong volatility has attracted speculators prepared to take on big risks in exchange for large rewards. He points out that investors who bet on MicroStrategy's success have seen big returns, but those who bet against the company have lost money. What do you think is the most important factor in achieving long-term success in investing? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.